Welcome to TradeTheNBA.com. This is John. This report is for the 8th of July. And, coming off the holiday, we see a brief dip, mostly because the whole trade tariff situation popped back up as a big deal where they sent out all these letters to other countries who hadn't made their deals. And, this is about forcing their hand. And, of course, we see that the EU is prominent in the list. And, Japan and them all got smacked with additional tariffs, and of course that freaks the market out, and they decided to sell, and then realize later that the deals will get made and everything will go back to normal. But for now, they've got to be panicked a bit. It did even out the DOC. Where on the ES here, we're almost dead even, pretty close. Slight head for the bulls in this case, but you can see the crossover we had of green moving below red. Red still takes lead, but you've got a complete reset here of steel. So plenty of buyers capable of pushing this thing into new highs, and it's just a matter of the settling of the rhetoric, and then it'll go back to normal. Because overall, the readings are suggesting that the economy is still surviving, that the end is not nigh. So much to do about nothing. And you still see this even from the NBI reading on the NASDAQ here. You're still above the 33 level, and you've got NBI weight from a short standpoint down at 3. As long as it remains in those levels, you're looking at just modest back and forth, normal reversion trade, nothing special. It was an opportunity for, taking some of that post-holiday gains and, just repositioning. Of course, treasury yields, rising a bit. So that, from that standpoint, it's going to put more pressure on the market because you can get better yields going into the treasury game. Why not? And it doesn't make sense that it wouldn't be moving higher anyway, simply because from a foreign demand standpoint, you would think that there would start to be an increase again once they get past this, because the yield relative to the exchange and everything is so much better than the rest of the world. Um, that's the crazy thing. The U.S. is offering rates that you can't find anywhere else. We had that attack of a vessel in the Red Sea there, and that caused a spike in oil because there's a de-escalation of the conflict area again, and that's problematic. Plus, you're still seeing no change whatsoever in sanctions or anything like that. And until you see them, despite the fact that the Saudis announced their big increase from OPEC standpoint, how long will that take before it starts to, really show up in crude build? And that's really where the problem is right now. Is things are quite behind, and until that evens out, and it's problematic because it delays recovery along with everything else that was going on. You saw that you know, even judges the other day already, putting halt to the big beautiful bill provisions, like suggesting that you have to fund certain things, that they've existed, therefore they always have to be funded, and it's like, what? I mean, some of this stuff is just crazy. From a euro standpoint, of course, euro's great, despite the fact that you see the economic growth in the eurozone is just trailing off to nothing. From a gold standpoint, it's holding its own. So we're just kind of in this beginning limbo stage, but of course, Trump is going to speak, and that's going to cause activity. And as that happens, we're going to get all over the place with intraday moves, but relative trajectory of the broader market is still to the upside. ETH also doing nothing, and unless there's some kind of innovation. But all you've got here is the pre-fourth buildup, and what? Oh yeah, that's right, the fill back all the way of the pre. So it wrote it up and then took it from the short standpoint going down. Yeah, fine. Normally. So here you can see from a 50K standpoint already to start the day, nice strong NBI magenta leading. And with the rising NBI white, so as long as the magenta stays ahead, and if you get a trail off of the NBI white, we should see continued move back above that 50%. So negative shakeout, it's going to be tough right there. That's going to be a resistance point. So we'll see how it plays out. But wouldn't be surprised to see it even open, and then just the dynamics of where the latest rage is being, played out narrative-wise. But intraday, you can see that from that early open, yeah, it was just nothing but selling. It wasn't even difficult to see that one go. Plenty of MBI white spikes, but you're already near the zero anyway, and so all it did was just fill the zero, make new lows. And then we had the spike afterwards that came across, but from a European session, Asia looking pretty decent. Back up to the top of it again. So, as they draw in more puts, that just helps support the call buying for the upside twist. It's just that options game that plays weekly after weekly, but from a broader sense, where else are you going to put your money? I mean, if rates move back towards the top side of thing, then well, you got to play there. But overall, still the general market is the only place to be at this particular stage. Are there a lot of headwinds? Absolutely, but it's always that fear state that causes the market to move higher because it's the counter trade to what everyone else is doing. Um, and from a broader perspective, the framework is set for things to improve. It's just a question of when that gets realized. And unfortunately, we've been moving that forecast further and further out each and every month as these delay issues keep popping up. Now that the big beautiful bill's done, it sounds great, but you got all the appropriations that have to take place for that money to actually be spent. And this is something we talked about. Well, we did the other day, where you may just find situations, even if it's approved, you still have to go through the appropriations for the individual funding of a thing. And then there's a question, is the Trump administration actually going to spend that money? And I think they may do their version of a pocket veto, not spending, depending on how they see the economic situation. It gives them the liquidity to do it, but they also have the ability to just not spend it. So I think that's going to be an interesting play. We'll see if that actually turns out to be the mechanism that's used to try and modulate where the deficits are. But of course, Trump's not wrong that if the Fed actually, were cutting rates and that, you would see a significant move, not just from the market, but from the broader economic standpoint. It would also reduce the deficit. So uh, one half dozen the other. He's not getting me in Powell, and Powell's only got a few more months left. So it's just a bide your time situation. So we'll see how it develops. I don't see him firing him, but you never know. I mean, it could get ugly enough to where it's like, okay, it's already been clear sign that you should have cut by now, and they haven't. So yeah, it's an interesting one. But as always, anything relevant, I'll put it on our team chat, and we'll just continue to play the signals because so far everything's spot on. Have a good one. Trade well.